Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Looks like just overall, uranium's still doing pretty well. If you guys like uranium, click a thumb up button down below. Helps me out and lets me know if you guys like uranium. We're going to do our daily technical analysis update of commodities. We're going to go through the dollar 10-year yield and work our way through all the commodities that I follow. I'll give you my financial opinion. And if you guys like this type of update, definitely subscribe to the channel. Definitely check out the link below for the Platinum membership if you want to know specific companies on how to play these. So we'll dive in here. I'll start with the dollar. This is the DXY, the relative strength indicator of the dollar, so to speak. And again, we're right underneath this resistance line. Are we going to break to the upside of this where the dollar starts to run to the upside? That does have implications to it. The dollar strengthening against other currencies. Basically, people prefer to invest in dollar-denominated assets when the dollar is going up. But we also can indicate that people are seeking safety in the markets because they think that other areas of the world are more dangerous or have bigger problems. I think that's probably the latter there, that people are seeking safety in the dollar and that other currencies have larger problems on their hands in terms of energy crises and whatnot in Europe, Asia, and so forth. So the dollar right now is basically pinned against this resistance support line that we've used throughout history, and we could see a big move if this were to break to the upside. Looking at the 10-year yield, the 10-year yield is also right on support. I should say right against resistance. We're right against resistance. We're right pushing our pressure right on top of it. Are we going to get a move lower or are we going to get a break higher? A break higher is indicating that people view the markets under an inflationary paradigm. If we break lower, it means people are running to bonds for safety depending on the rate of change of these yields. So if we see a large dive lower where we just beeline it lower, people are seeking safety and they're running to bonds and they think that the stock market's going to crash. If we see a break higher here, what that is indicating is that oil is probably going to go higher, or oil is the thing that is driving it higher, and that we are still in an inflationary period. I am in the camp that we are going to go higher this winter, where oil goes up, natural gas goes up, and our inflation figures still continue higher. That is the camp I am in at this time. I can obviously change my mind at any second, given looking at these inputs. A lot of people think that we are going to go lower and that the inflation is peaking and that a crash is coming. The reason I would disagree with that viewpoint is that we've got a nice little setup here that we are trying to go higher. We're against resistance. It's the Federal Reserve thinks that this isn't over with. They've said in their FOMC minutes that we could see a dramatic increase in the price of oil. I think that they're inclined to think that interest rates are going to continue higher, and I don't think they're going to fight the trend and try to hold interest rates down. So I think that they're going to let these interest rates move on higher. That's my look at it. And I could obviously see other people's viewpoints with economies collapsing. And usually, looking at history, with a collapsing economy or economy that's coming under pressure and growth is slowing and or going negative, and with the energy crisis in Europe and Asia and the astronomically high pricing over there for those inputs, they very well could see a very hard recession. So the question then becomes: do you look at the history of it and say, well, historically these things are going to go down and people are going to run to the safety of bonds? But that would be the wrong move if it's an inflationary recession, where the constraint in the system is energy, and a recession is inevitable because the demand needs to be destroyed because the energy isn't there. Which one's going to win? Which force is going to win? That's the million-dollar question. I am still in the camp that this could go higher for a while longer, at least. and maybe even higher for a longer period than what most people are thinking because of the money in the system and checkable deposits and a whole slew of other things that I look at. TLT heading lower. I still think this will head lower with bond yields going higher. This is bond prices. So I still think this is going lower by looking at this chart. I don't see huge reversal patterns yet. And then TYX, I still think this will go higher, indicating that yields are going to increase on a 30-year bond. That means inflationary is what that means. Looking at the commodity index, we had a sharp sell-off today. I think it's highly correlated with oil. Is there a stark reasoning for why oil went down? I'm not even going to get into it. There's a lot of things that are happening in the markets to create this volatility. We could see algorithms, AI, so all sorts of stuff kind of working in the background of these things. And sometimes at the end of each month, these things like to sell off real hard. So we've come on hard down today. We're going to look at the oil chart and see what that says. Gold heading lower as well. Gold does not like higher yields. And with the recessionary fears and the contraction in the M2 money supply, gold is coming under pressure. So that's what we're seeing here in the short term for gold. We're seeing more pressure under silver. We still have good, strong resistance support at 1815-ish. And then platinum also seeing some selling pressure and heading lower. This could break to the downside here if this resistance line right where we're at doesn't hold. And maybe we do another move back to the 700s. And kind of a long term, this is a long term, $775 or so is where basically the cost curve's at. And to go much below that and stay below it, it's going to be very difficult. So we're buying platinum basically on its cost curve in the low 800s, upper 700s here. I think that's a great spot to be accumulating physical platinum for myself. XAU to gold ratio. What does this mean? This means that the gold and silver miners are underperforming gold. It means that we're not in that big boom of gold yet. We are pulling on back in this ratio. The miners are underperforming gold, and we're still pulling back. We pulled back a little bit, and we've broken out of this little guy. Now, does this mean that we head lower? Maybe, maybe not. We could see this do kind of a slingshot pattern if it were to go higher. I'm not in that camp yet. I don't know if the market conditions in the immediate term are showing that, but it could. And I'm not necessarily positioning for it. I'm looking a lot more so at some of these other sectors. But looking at SILJ still pulling back above support. The support isn't broken yet. And then looking at GDX, GDX also is dipping down below this, and we do have support underneath here for GDX with a whole bunch of buying and selling all in this region, which is going to act as support underneath it. So we're basically pulling down into that support region, and I don't think that we're just going to blow through it. I could very well be humbled by what I just said there, but we do have a lot of support right underneath it for GDX. Crude oil getting the shellacking today, down 5%. Again, we're right on this support zone. So we sold off hard today. We're right at support, and we'll see if that support holds and see if we can go higher again. But it is a large down day. It's not a reversal candlestick, luckily, but it is a big down day, and maybe it has a little bit left to go down a little bit more. Maybe not, but there is some momentum behind this move. Natural gas selling off a little bit. We do have these wicks at the bottom, which means buyers are coming in and buying it up throughout the day. We are at that resistance line. Are we going to break this resistance line? I don't know for sure. I very well think that a pullback is still possible to a region somewhere in that range. I know that the politicians want this thing to go down. I don't know how they're going to make it go down, but probably delaying the Freeport LNG coming back on, which they did. They're pulling all the stops out to try to get this to come back down and show lower inflation numbers. But it is a possibility that this could head lower. We're right at that. So the resistance line there's a possibility that we break out of here and it starts to run. So we're at that decision point. We'll see which way the buyers and sellers, they're interacting in a way where there's a strong tug of war here. That's why we're getting these wicks at the bottom here. It's not just sellers blowing this thing to the downside. So I'm curious which way this thing breaks here. And again, guys, I'm not really playing it in terms of the short-term trade. I'm riding this stuff for the long term. I think we're going higher in the medium to long term. But very short term, it could go either way. We're getting selling pressure in XOP. We're right on this kind of, well, I didn't draw it that well. You could say the support line is more like in here, kind of hitting it. It's only 2 hits, not a strong support line, but we did sell off today in this upper channel. And we got a little wick at the bottom there. Little wick. Again, I'm not really buying or selling much in this. I'm not selling anything, but I'm not buying much up here. I think we're kind of high in some of the energy exploration companies where if we don't break, we could still see a pullback in some of them. OIH is pulling back to support. I do think it's going to be a good spot in this general vicinity to be looking. So I still think everything's game on. And again, guys, it highly depends on what oil and natural gas does. If we blow higher, I think the companies will blow higher. So that's kind of my take there. Looking at uranium. Uranium future prices are at $49. We were slightly lower today, but we are breaking out of this pattern here to the upside. That's a positive thing. Looking at the Sprott Physical Uranium Trust, the trust is moving higher. It looks pretty good, actually. We came down and had a little bit of a bloody nose day, and then we finished higher. Very strong. The thing that everyone should notice is that the Sprott Physical Uranium Trust was up in a down market. So uranium is looking absolutely fantastic. We've got some resistance through this region here, which we're breaking through right now and starting to work our way above it. And then if we can work our way above, we'll call it the total resistance area in this general vicinity going across here, that's really where we want to break. And we're starting, here, let me delete this out. Or let me put this back here. It loaded. Once we break out of this guy at 1815, 1820 and close above it and really stay up here for a little bit, we could see a big old move. So this thing is lining up for a move to break through this resistance line. It looks really good. And the momentum's behind the Sprott Physical Uranium Trust. So that looks really good for a move higher. URNM also looking quite strong throughout the day. I know we had some selling pressure in the beginning of the day. People probably got scared. Oh no, it's going to turn around. But we got that bloody nose, the bloody forehead. It is a continuation pattern to the upside. We did this in the face of a down market. That means something. It's showing strength. Showing strength, and we've moved on up here, and it looks really good. And it still is intact for a move higher. It still looks good. CCJ, looking at Camco just as our leader here. Again, it finished higher on the day, quite surprisingly, with the down market, and it's still chugging higher. So hopefully the buyers and that momentum keep that momentum going. Looks real strong. People are piling in. Looks great. And if you guys like uranium, definitely put a thumb up in the description link below. Help me out, guys. So coming on down, looking at TAN. TAN is still chopping all around here. We could work our way lower. The markets are pretty weak overall in terms of just regular stocks. And here we are. I still think this looks great for a move higher. Everything looks good from a technical charting perspective for TAN. Looking at COPX, getting a little bit more selling pressure today, down 4%. Obviously, no one likes seeing a down 4% day in their portfolio, but we're coming on back. We could see this pull back a little bit further. We're breaking this little uptrend line here. We could pull back to that next support level. 28 bucks or so is where that support level roughly sits. Looking at the CRB to S&P 500, getting a little bit of selling pressure today, but we've had a pretty good run up here. We could cool off a little bit and then eventually return higher. Highly depends on what oil's doing. Looking at rare earth metals are continuing to pull back. I think that's going to continue to pull back for a little bit longer. Maybe we hit this region down here of support. 86-ish dollars is where that support level's at if we were to get that low. Lithium LIT ETF, again, selling off a little bit today, 2.14% lower. And we've got some larger selling pressure through here. I still think that we are heading towards this support line right at 72.50-ish, somewhere in that range. So probably further downside there. The S&P 500 feeling some selling pressure, and it's dragging some of these other guys lower. We do have a little wick at the bottom. Is this thing going to slow down in this sell-off here and get a little bit of a bounce? We'll find out. But still a down day today. The U.S. Composite Index also selling off with a little wick at the bottom. Again, I don't see a huge hammer candlestick or anything like that. You could say it's got a little hammer candlestick, but there was a little bit of buying pressure throughout the day. That's why it pulled back up and closed a little bit higher off its lows, but still down day, doesn't look all that impressive. EEM feeling the sting of the strong dollar. It's still quite low. It's pulling on back. I still think we could potentially do a retest if it were to get down there. Let's see what tomorrow has in store for EEM. Looking at XHB getting a little bit more selling pressure, down 0.75%. I still think we could head a little bit lower out of this, but we do have a broken downtrend. We've popped up. We're getting that first pullback, and I think we've got a little bit more momentum to work off before heading higher in that. Lumber also basically tracking sideways for lumber, right kind of below the support resistance line for lumber there. We've got cocoa futures. So cocoa futures moving sideways. Still looks good to me to go higher. Wheat moving sideways, getting that bloody nose. It's a continuation pattern higher with support underneath us. That still looks good. Soybeans moving sideways within this pattern, squeezing up to the tip here. We'll see which way it breaks. My guess is probably higher. Corn also getting a little bloody nose. That's a continuation pattern to move to the upside. Still looks good, and everything's in check there. Copper feeling a little bit more selling pressure. I still think there's a little bit more left to the downside here. We could cut a little bit lower. We'll see where we find that support. And right now, momentum's to the downside. Looking at Moo's still selling off. We got a little bit more selling pressure through here. I still think we have more selling pressure left. I don't see a contraction in the candlesticks. We see large selling pressure. So I still think that we're in a little bit of a pullback mode. What I see is this pattern that looks something like this, where we could come somewhere in that range, maybe around $90-ish, maybe slightly below $90 would be a spot that I think this pullback will go to. So somewhere in this vicinity in there. Scrolling down, looking at aluminum selling off quite hard. These recessionary fears are starting to hit home. I still think that we've got good support underneath us at about 2,300. It's probably going to track sideways for a little bit before heading higher. And then we've got the Baltic Dry Index also getting hit. These recessionary fears are taking a grip on the markets. So I'm still seeing some weakness around the markets and some strong selling pressure in the shipping companies. And right now, there's a bunch of fear in the market. It is attacking some of these sectors a little bit more than others. Uranium's looking quite strong. That thing looks quite beastly, honestly. Oil's looking good. We're still sitting on top of support. Everything looks A-okay. Could we get a pullback in natural gas and some of these things in the fall? We could. If you're a Platinum member, you've heard me say this, we could get a pullback in the fall. I'm still unsure if we're going to get that pullback. It depends when the LNG Freeport comes back online, that terminal. If it comes back online sooner, I think it will support higher prices. If it doesn't come back and they delay it, they being the government or whoever, then I think we could still see some weakness in the fall. I think that weakness is a good buying opportunity. That's what I think. The weakness is still, I think, potentially ahead of us. I'm kind of just waiting and seeing what's going on. I think that we are right up against that resistance line in natural gas. We haven't broken out yet. So we could pull on back some. Again, I don't know the future. What we do know is we're up against resistance, and we'll see if that resistance wins in the short term. If it wins, I view it as a buying opportunity. I'm holding on to my shares. I'm riding this thing through. I'm not really selling anything. And I say I'm not selling anything. I would still be accumulating some of these that are down, but I got to see turns first. They got to bottom out, come back and turn around. So that's what I'm looking for. I don't see it in some of the companies yet. What I mean by that is, some of the shipping has been pulling back. Some of these other companies, aluminum's been pulling back a little bit. I'm looking for a turn. I'm looking for strength. We started to see some strength in aluminum. I'm still waiting. I'm watching that thing, seeing when it's going to come down and turn. It could take some time. So patience is your friend. It's not your enemy, guys. And I'm just kind of waiting. I'm building some cash positions. You guys have heard me say that on the Platinum membership, just kind of building some cash to see if we get a pullback here in the fall. And then if we get a pullback, I see that turn, I'm going to deploy it again and keep peppering these things because I think that the imbalances in the market have not been solved yet. That's what I think. And we're just kind of waiting to see what we're going to do this fall. That's kind of what I'm waiting for. But uranium looks by far the best of all the sectors at this time. All right, guys, give me a thumb up. Subscribe to the channel. Definitely check me out on the website below. The Platinum membership's the membership I would use if you guys want to get information on what I am doing in financial education, technical analysis trainings. I got to set one of these up here for more technical analysis training. We are going to do a Saturday question and answer session, 7 a.m. We'll do that. And I'll let you guys know what my opinions are there. All right, guys, we'll catch you later. This is Finding Value.